Hi everybody, hope you can hear me. Very warm welcome. Good to have you here today. And I'll just move the chat box out of the way. There we go. I thought we'd start with sentiment because that's exactly what is going on right now. I was on the pound Aussie earlier on, as Anna was talking about 20, 30 minutes ago, but I've now flipped over to the Aussie yen because that is what is going on in terms of the river of sentiment, risk on, risk off. This is on the indices. I've got the YM, the NQ, and the ES up at the top here. So that's on 5 minute. This is on the daily. There's some interesting things on the daily. I won't dwell on them at the moment, but you can see the sentiment at the moment that's driving risk off, certainly from an intraday perspective. So if we go over onto the multiple currencies, there we go. Got the, the large size up there. Let's drop that away. There we go, move that out of the way. I've got the Aussie yen. You can see the yen buying that's come in. It's pretty strong. This is on 5 minute, I think. Yeah, this is on the 5 minute currency strength indicator. So you can see the buying that's coming in on the yen, and that is counterbalanced by the selling that is going on right now in terms of the Aussie. So it's a classic example of risk on and risk off, reflected through the prism of the Forex world. And there's also some nice VPA examples here. I'll just pop open the 1 minute. This was the nice thing with NinjaTrader is you don't have to worry about adding 2 hours on or taking 2 hours off, all that sort of stuff. This is basically our local time. So this is 7 o'clock. Here we are. This is the European session getting underway. So we can compare volume through this area up to 8 o'clock here. This is the London Open. Interestingly, on the first candle, we don't get much in the way of volume, but then we get this huge surge on the next one. I mean, it sticks out like a sore thumb, this huge telegraph pole. You can see the price action here, drawing traders in, jumping in, getting trapped, reversing very sharply, ton of volume underneath, pretty weak. You know, it's hardly going up. And on we go into this nice price waterfall lower. And it's just a classic example. And this will, the fact this is on a 1 minute is irrelevant. It's the principles of VPA apply to every single time frame. And what you've got here is a classic example of Wyckoff in action. You've got rising volume and you've got a falling market. So you've got a waterfall of price, and it's supported by rising volume, because in a market that's falling, you have to see rising volume. If you're seeing falling volume, then it's not going anywhere. It's the same principle as a rising market. In a rising market, you want to see rising volume. You want to see effort going in. It's about effort. It takes effort to rise and it takes effort to fall. The anomaly, if you like, from a standpoint of gravity is that we're all familiar with gravity. And yet in the trading world, it also applies to a market that is falling. It takes effort to fall, and that's what you want to see. You want to see this rising volume driving the market lower. In other words, an increase in selling pressure. And ideally, you want to see widening spreads as well. You can see the trend monitor supporting. We went through this phase into the 2-color transition, out the other side into bright red. Then you've got all the other aspects of dealing around the volume point of control. You know, how far is this going? Where's it going to stop? Well, we went through this region here of low volume node pretty quickly. You can see here we sliced through there without much effort. But then what happens, we're coming down to the volume point of control, which is where we expect the market to congest. We've also got a ton of volume underneath, which is also going to provide support to that particular move. And in addition to that, you've got this level here. This is on the accumulation distribution indicator, which is the equivalent to that on MT4, MT5. And basically what this does is it displays the strength of that, excuse me for a moment. It displays the strength of that region by the thickness of that particular line. These are calculated automatically by the indicator. Where my cursor is, that level there is very strong. It's not me putting a line on the chart and saying, well, I think it's a strong level. It's actually the indicator presenting this graphical description of strength and weakness up and down the time frame. And basically, very simply, the thicker the line, the stronger that level. And you can see how strong it is across here. You know, these bounces here, it's sat on this level, and you also get a little indication across here in terms of the numbers. You might not be able to see it, but this level up here is a very minor level. It's only been tested once. So the expectation is that's not going to be a very serious region of potential resistance or potential support. This level down here, which is hidden behind the volume point of control, that was tested 6 times, so that's much stronger. So it takes more effort to go through there, and therefore more the greater the potential it has to act as either resistance or support. And you've got this one coming into play here. So in terms of trading this particular opportunity, if you were looking at this as an opportunity up here, you've seen this perhaps, you're wondering, you know, how far is this market going to go? Well, if the VPOC sat here, you know, it's not going to go too far before you're going to run into some pretty serious resistance, pretty serious support rather, both in terms of the volume wedge that's sitting here, because it's all clustered around the volume point of control, which is your heaviest volume over here. And secondly, you've also got this very strong platform of price-based support, because remember, this wedge of volume is acting as volume-based support and volume-based resistance all the time, or lack of volume, and it acts as these low volume areas where you're going to see price move through pretty quickly, or where you get to these heavier regions where you're going to expect price to slow, particularly around the volume point of control. And from a price-based perspective, it's exactly the same support and resistance as you're all familiar with in terms of using price. So it's using both volume and price in terms of viewing the potential of that particular trading opportunity from a support and resistance perspective, or how far is this trade likely to deliver? Is it going to deliver me a lot, or is it going to run into some area where it's going to hit some problems? And you can see it's hitting problems here, because that's what we're seeing right now. And the reason I was focused on sentiment, pulling the VIX across, which will just pop up full size here, is because what we saw initially was this gap. We started off at 26.2, we spiked up to 26.8. That is the reason that we are seeing the current sentiment, certainly from a faster time frame at any rate, shift from risk on to risk off. Now, if this obviously reverses and starts filling, then we're going to see that sentiment shift again, and that is part of the reason that you're now starting to see that pause point, certainly in terms of yen buying, and ultimately that will revert back to yen selling in due course if this does indeed develop into a reversal from risk off to risk on. This is the 5-minute, this is the 10-minute, and this is the daily. The other aspect about the daily is, I just want to pull this up to full size. That's on the minute. Let's go to the daily. Where are we? There we go. Okay. There are two things that are interesting about the VIX at the moment from a longer term perspective. First of all, if you were trading yesterday, what you will see as an anomaly is that we had the VIX rising, and yet we had indices rising also, which is anomalous. The reason for that, I'm not going to go into great detail about it, but part of the reason for that is that the markets per se are buying volatility ahead of the US presidential election. And the basic premise is that the markets and the trading community per se is expecting huge volatility around that event, and therefore they are buying volatility in advance of that event, because the outcome may well be challenged, and if it is, there'll be an awful lot of volatility going on. So that's part of the reason that you are seeing volatility rising. In addition, you're also seeing broker margins increase. I think we put a post up in the room last week. We've certainly had several notifications from certainly on our interactive brokers accounts at any rate, that margins are increasing. They are being ratcheted up. They're not being increased dramatically, but they are certainly ratcheting them up, and will do so into the election. So they are expecting a dramatic increase in volatility as well. And that is the reason that or certainly a couple of reasons that the volatility index, the VIX, is actually holding up at this very high level, which we've referenced before, because with the markets, I won't say rampaging, but and I'll go back to them in a moment, because let's just move that out of the way now. I'll just flip that back to the multiples. So I've got it to hand. Sorry about this. Just do that over here. Oops, wrong one. I'll do that in a moment. But that's part of the reason we are seeing this, because if you go to the indices themselves, just drop down on there very quickly. Right, we're starting to see that tick up now. That's why we're starting to see a little bit of yen selling coming in. We had some volatility here, so we had a volatility trigger. So we're starting to see, and we've got a compression, we've got a narrow spread candle here on decent volume. So we're starting to see a little bit of buying coming back in again. But in terms of the dailies, what's interesting about the dailies down at the bottom here, the YM, the NQ, and the ES, what we're actually seeing here is falling volume in a rising market. So this is starting to look a little bit weak. We've got exactly the same here, and we've got exactly the same over here on the daily. So that's where we are sort of longer term. We're starting to see that reverse. Let's go back on to, where were we? There we go, the Aussie yen. Just seeing that tick up, and that's why we're starting to see this. That was the buying, that was based on the VIX, that was based on sentiment, etc., etc. It's now starting to roll. We're starting to see the Aussie buy. And that's why we're starting to see this pause point come in and the reversal from that bearish sentiment into a little bit more bullish sentiment. In terms of, let's just go over on to the multiple CSIs and look at that from the perspective of different time frames. Here we go. Let's wait for that to pick up. Just get that out of the way. There we go. So this is on the 1 minute. That's what we're seeing. So from a scalping perspective, we got into heavily oversold. The yen didn't quite get into overbought, but is now selling off quite strongly. Starting to see that reflected here. In terms of the 10-minute and the 15-minute, you know, you're not seeing that. And this is the conundrum that you're always facing as a trader. You know, what is it I'm trying to do? What time frame am I using? Am I down here in the scalping perspective, the very fast, you know, maybe sub 1 minute? I'm on 15-second a lot here, you know, 15-second, 30-second, 1 minute, 2 minute, 3 minute maybe. You know, the guys up here and the girls up here on 10, 15, 20 minute, 30 minute, they're really not interested in what's going on a 1 minute time frame because their perspective is totally different. So, you know, they might be looking at this now as, okay, the yen's very oversold, you know, possibly looking for an opportunity there. And that's what it's about the whole time. It's this constant process of up and down the time frames. But once you're in a trade or you're about to take a trade, you know, what is it I'm trying to do? What am I about to try to take out of this market? Looking at the chart, how long am I going to be in here? Am I in here for a few minutes? Am I in here for a few seconds? Am I staying in this trade for hours or days? You know, what is it I am trying to do? You can see the strength of euro buying that's been going on. Since really London got underway, we've had strong euro buying, we've got strong euro buying, starting to get up into an overbought situation, but not much at the bottom to match it in. We haven't got a nice counterbalance of, you know, euro buying at the top and something equally weak selling at the bottom. So it's quite a lot of mess going on at the moment, and that's the other aspect of the currency strength indicator. It's really to tease apart, to try and pick off those opportunities and also to ignore those opportunities which are just not going to deliver. And part of that is to do with the strength of the line, how steeply that line is rising. You can see here the pound is rising very strongly on the 1 minute time frame. So would you be looking at it against the yen? The answer is no, because the yen's now rising strongly again. So in terms of pound yen, that's not going anywhere on the fast time frame. Pound dollar's not going anywhere on the fast time frame, but it would be moving against New Zealand dollar, which is selling off quite strongly. So pound New Zealand would be okay. Pound Aussie. In fact, let's hop over onto pound Aussie, because I was looking at that earlier on. There we go. Let's just change this over onto pound Aussie. Just to pick up on what Anna was saying yesterday about the on pound Aussie on 30 minute. This was yesterday. Just refresh that. There we go. This was yesterday. You know, we had this terrific move in the morning about session crossovers. Anna was on, I think, pound Swiss. This is exactly the same situation on pound Aussie, and it's another. Well, there's several examples of the importance of this particular of the session. This is 8 o'clock London, so we're getting underway. This is 1 o'clock. This is where, you know, the US session gets started as well in terms of Forex. So you've had this terrific trend higher. Then you get the weakness at the top here. You get weakness, 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 doji candle, indecision, and on down to the volume point of control. Then there's a pause point. But once you start breaking below, then you're into this wonderful low volume area where you expect price to move through pretty rapidly. You can see at the bottom here, initially it takes some effort, but lower down here, it doesn't take so much effort to get through because there's less volume there to present a support platform to the market falling. Then you're looking at all these other levels of potential support from a price-based perspective. But the important thing with this particular trading opportunity was obviously the session crossover. Now, it doesn't always happen like this. There's no always in trading, but it's something you have to be aware of. You will see it frequently where you see a strong move in London and that does not follow on. It doesn't automatically mean it's around the dollar, although often it is. So you'll see maybe a strong selling in one time frame as the US markets get underway, then that is reversed, that sentiment shifts and so on and so forth. But it's just a great example, and it's obviously supported by the trend monitor here. Blue into the two transitionals, dark blue out the other side into dark red, into full-blown bright red, and that's where we're sitting at the moment. Now the other thing with the daily chart here, and of course how that reflects in terms of what we're then looking at in terms of a daily chart, just pull that out a little bit, there we go. So that was the price action yesterday. You've got this weakness appearing now. You're at the volume point of control. You've got this heavy area over here. In addition to that, you've also got volume falling on the daily, exactly the same way as we have got falling volume on the indices over the last 3 days. So we've got a rising market, but we've got a rising market in falling volume. We've now got this very weak candle appearing here, decent volume below it. We've hit the volume point of control. We've got resistance above. So in terms of an opportunity, are we looking at something like this in the longer term? Quite possibly. Obviously, if that is to occur, that could be triggered by several events. It could be triggered by Brexit if it's on the pound. Something occurs on Brexit that the market doesn't like, so we see heavy selling of the pound. It could be influenced by heavy buying of the Aussie through risk. So there's all those factors to consider. So I just wanted to highlight that one there. Let's just see what's going on, see if we can pick something up. Let's just go on to let's go back to the dollar matrix, just see if we can see what's going on there. Right, this is on the currency majors. So what we're looking at here is really the prism of the dollar. So we've got cable, dollar CAD, Aussie dollar at the top, euro dollar, dollar Swiss, and New Zealand dollar down at the bottom. This is all same time frame, 5-minute time frame. So you're really looking at, what is going on? Is the dollar being bought? Is it being sold? Which are the pairs you would look at? Well, again, you wouldn't be looking at, certainly on this time frame, I think this is on 5 as well. Yeah, this is on 5. You wouldn't be looking at dollar Swiss, for example, because the Swiss franc is being bought equally strongly as is the dollar. You wouldn't be looking at the dollar yen because the yen is rising, the dollar's rising. You'll be looking at things like cable, because pound's falling at the moment, dollar's rising. You'd be looking at New Zealand dollar and the Aussie dollar in the same from the same perspective. Let's just go on to the currency array.
Euro New Zealand.
Yep. And as mentioned, the Euro New Zealand, you can see it here. This is on the 3-minute. It's the strongest one here. In fact, if I isolate out on the New Zealand dollar, it'll give you a clear perspective. There we go on the array. What we're always looking for is 2 things. We're looking for the strength of that trend, which is displayed automatically on the currency array. It gives you a straight visual on the strength of trend, the angle of line. Now we're looking at the perspective of strength and weakness from the pairs perspective on the currency strength indicator. You're looking at it from the perspective of individual currencies. On the currency array and the currency matrix and the currency heat map, you're looking at it from the perspective of the currency pairs themselves. And what we're seeing is a universal picture. We've isolated out on the New Zealand dollar, and what we're seeing is universal selling of the New Zealand dollar at present, certainly on the faster time frames. And the reason you can say that with confidence is because you've got what we call a full house, or I call a full house, from a card game, but basically you've got a complete set. In other words, you've got all these pairs at the top, these 3 pairs at the top, these 3 pairs at the bottom. So you can categorically say that the market per se, certainly from the 1, 2, 3 minute upwards, is universally selling the New Zealand dollar. Doesn't matter why, that is what the market is doing. So if you're trading New Zealand dollar right now, in any of those pairs, you are trading pretty much with the universal sentiment of flow for that particular currency. If we head up to the 5 minute, do the same thing. We haven't got a perfect picture, but then you wouldn't expect to see a perfect picture, because what you're looking for now is this selling in the 3 minute to ripple through into the 5 minute. If we isolate out on the 10 minute, again, you know, these guys here, these have got to follow up in exactly the same way as they are here. So what you're looking for is a closing of gaps here. You're looking for these to strengthen, to steepen, to continue climbing, and the New Zealand yen here, obviously to join its brothers and sisters down here to start falling again. And what it also gives you a clear view on is, well, which are the pairs to be in and which are the pairs to avoid at present. And if I went back to the CSI, probably the reason this is flatlining at the moment is because the New Zealand and the yen are moving in the same direction. So that's the reason that one is probably moving in a straight line at the midpoint and not following in the general direction of the others. So you get this constant sweeping effect of sentiment as literally as it flows through that particular currency and across the complex. What you're then looking for on the ranking ladder down here, this gives you a very visual signal of when a currency pair is either approaching or at a potentially overbought or oversold state. When it's at a potential, it appears in these brackets here in the darker color. When it moves to the potential condition of overbought and oversold, then it'll change to a brighter color. It'll be a bright blue without the brackets and a bright red down the bottom here. As I say, potential, you're then off to the charts, you're looking for the opportunity, you know, what is going on, and you're looking at volume price analysis, you're looking at the indicators, you're looking at multiple time frames, and so on and so forth. You're just constantly repeating the process. So if we just go over, let's go over onto the Aussie New Zealand, seeing as that one, that's at the top of the Aussie New Zealand or Euro New Zealand, doesn't really matter which. Go and look at both of those. Okay, that's what's happening on the pound Aussie at the moment. Let's just go to the, let's go Euro New Zealand. Wait for that to load up. Okay, there we go. It's a relatively minor move. It's not that dramatic. It's a little bit choppy, and you know, we're now at a point where you're thinking, right, well, is this a move that's going to go anywhere? And the short answer is no at the moment. Let's reload that. There we go. Why? Well, because, you know, we've got the volume point of control heavily in evidence here. We've got several reasons to think, well, yeah, okay, there's been a bit of a move, but you know, now it's potentially coming to a pause point. If we're going to trade this as a breakaway, then it's a question of waiting. You know, congestion is building. It's building around this region, which is the heaviest volume. We've got a minor level of resistance coming into play here above. We've got volume falling away up here. So if we break to the upside, then, you know, we should expect to see the market move higher. Let's go down onto a slightly slower time frame. Let's see what we've got in the way here. Similar sort of picture. We've got, you know, relatively low volume up here. What you're also seeing here is you're seeing a falling in selling pressure. So I mentioned earlier on that when you see markets reverse, if it's going to be dramatic, then you want to see rising volume. If you see falling volume, then the prospect is that the selling pressure is diminishing. So you've got a falling market, only 2 candles, I appreciate, but you've got falling volume. So that is telling you that the selling pressure under there is diminishing, it's dying away. So the balance of sentiment, if you will, from bullish and bearish is towards bullish. And you've got the same thing there. Let's have a look up on, this is a 30-minute, in fact, I'll change this to make it a bit closer. Let's change it to 10, there we go. Let's see how the 10-minute looks like. Okay, we had a lot of indecision. We had some weakness here. Then we had some buying coming out of this candle with the wick. Then we had this down candle, okay, but we've got some support in underneath. We're starting to try to push up into this region here. We've got a good platform of support here in here from price-based support, and we're now looking to push higher.
Just by the way, somebody reminded there's
Sorry, I'm just listening to Anna.
New Zealand is in a There's going to be an election in a couple of weeks.
Yeah, there's an election in a couple of weeks. So what we're now seeing is, in terms from a CSI, you can see here the euro, we got up into overbought. It's now starting to sell off. That's what we're starting to see here, which is no great surprise. But in terms of the opportunity, will we be looking at the euro New Zealand? No, because now the New Zealand, now they're traveling in the same direction. So whilst there may be some momentum in that move, it's not going to be as strong, for example, if you looked at it in terms of euro pound, because the pound is rising and the euro is falling. So if I switch this over to euro pound, let's go have a quick look at euro pound, see what that chart's like. There we go. Okay. What are we seeing on euro pound? Let's go on to the fastest time frame, 15-second. There we go. Moving into a low volume node, but now we've got a volatility trigger. So what? And we've got a ton of volume under there. So what are we expecting? Expecting at least a bit of congestion, possibly a reversal, but certainly some congestion. Have we got it on the? Have we got volatility on the 1 minute? No, we haven't. Trend monitor's bright red, keeping us in through this choppiness here. Continuing lower. Let's go up to the 3 minute. What are we doing on 3? Looks fine. I've got the volume switched off here. 2-bar reversal. Bearish engulfing, down to the volume point of control. We get congestion at the volume point of control. It's what we expect to see. Looks as though it's breaking away. If it does break away, from a breakaway perspective, what have we got below? Pretty nice, actually. We've got falling volume on the volume point of control. So once we get through this level here, which is literally being tested at the moment, should go through there pretty quickly. How far are we going to go? Well, we've got very light price-based support here. So from a 3 minute perspective, you know, decent trade. There's not much in the way. Let's go up to the 5 minute. Have a look at that. Not quite so clever on the 5 minutes. Yes, the volume is falling away also. But we've got this quite strong level here. This has been tested 4 times. Just going to come down and test it now. So a pip or so below. Let's see if it does test that or not. See if we get a bounce off it. If it gets through that level, then yeah, we're clear and free, because we've got limited potential support here. And volume, as you can see, is falling away quite dramatically as well. But we are trading around this volume point of control. So you're always having to be patient and wait for, you know, the market to develop and break away from these regions. Congestion trading is great if you have the patience. Okay, and obviously on the daily, when we're looking at it from a longer term perspective, you've got a lot of reasons to expect this market to not really travel a great distance. So in terms of a daily perspective, if you're looking at short on this, you've got a very strong level here. You can see it on the accumulation distribution here. So it's a very strong level of potential support coming into play there. And that's at 60. So you've only got 13 pips on the daily before you start to hit that level. And then, you know, 20 pips below that, you're starting to go real deep into this heavy volume. You've got the volume point of control itself. So from even holding that for a longer term perspective in terms of, you know, 10, 15, 20, 30, 40 minutes, an hour, whatever, you know, the chances are it's really going to struggle in down at this region, because you've got, you know, several reasons to expect that market to congest at that point. So it's really only at the moment, it's really just a scalping move. Try and take some, you know, maybe 3, 4, 5, 6 pips out of it. But obviously, when you're looking at these opportunities, you have to take into account, you have to factor in the spread that you're going to be dealing with, because if you're dealing with something like a spread on a cross pair, trying to take 4 or 5 pips out of a euro pound is enormously difficult, because you are dealing with a wide spread. If this was euro dollar, I'd say yeah, fine, you know, go ahead. But you're dealing with euro pound, so you're dealing with a much wider spread, which is going to hinder you. Excuse me for a moment, just got a frog. So it's going to make life difficult. Let's flip over onto cable, because you can see there cable's rising strongly and the dollar's falling strongly. So let's just flip over onto that one. Here we go. We've got decent move developing. Let's just refresh that. There we go, starting to break away. It's got 1 to 1. There we go, nice move. Trend monitor supporting. We've gone, you know, through all this clag of volume here, got through that region there. We paused, got through it. What's interesting is we got through it there. Then we came back and retested it again. Now we're breaking higher. Look at the speed you go through these low volume areas. Went through that pretty rapidly, bit of weakness coming in. No, it's fine. Carry on higher and on up we go. And it's supported with the trend monitor throughout the time frames, 15, 1 minute, 3 minute on blue, 5 minute on blue. Hasn't transitioned on 10 yet. You know, we've got some way to go on 10. May not ripple through on there, but you know, that's what you're looking for. And then you're looking at the volume profiles that are building. We've gone through the volume point of control, but look, the volume is declining a little bit. Depends what happens on this particular candle. Where are we on? We're on 10 minute here, so we've got a couple of minutes to go. So it's looking a little bit weak. Why? Because we've got those 3 candles rising, and yet we've got volume falling away on that particular time frame. In addition to that, if you scroll right back over here, you know, we're still trading inside this volatility here, and we're trading around the volume point of control here as well. Slower time frame, I appreciate. Those are all the sorts of things you have to factor in and look at when you're considering the opportunities. And it comes back to what I said at the start. What are you trying to do? Are you in here for seconds, minutes, hours, or days? You know, that's what it comes down to the whole time. And then using multiple time frames across the indicators and across the charts to give you that information and trying to pick off the opportunities as they come. The opportunities, it's like sitting in a sushi bar. You know, that they're all laid out there. They're all revolving around on the ever rotating tray on the conveyor belt as it moves past you, and all you have to do is just pick whichever dish you're going to have. Well, it's pretty much the same here. You just choose the dish. That's it. I'm in, and then out, and then the next one comes along. All right, I'm in here. I'm out. And that really, it's the same principle whether you're dealing with a slower time frame or a faster time frame. Okay, let's just have a quick look at the Renkos in multiple time frames, which we haven't done for a little while. There we go. Onto the Renko. Oh, in fact, I've got cable over here anyway. This is on the this is the Renko optimizer on NinjaTrader, and what this does, it delivers the optimal setting for you on a Renko. And a Renko chart, remember, is independent of time. There's no time element involved here. Let me just reset these because I didn't reset these this morning. And basically these are matched with the time frame below. So this is 15 second. So all I do is select 15 second, let it settle. Okay, and it's going to tell me the brick size, and it's telling me basically 15, and that's not 15 pips, it's basically a pip and a half. So you just stick a decimal point in the middle. So that is now trading on a brick size of 1.5 pips. And it's telling me, you know, the optimizer is delivering the optimal setting. I've got the trend dots on here, which work brilliantly, and the trend monitor. And the two of them in tandem are the perfect complement, because what they do is the trend dots give you the trend very close to the price action. You can see we transition into red, not a shift in color on the trend monitor. Now we've come out into blue. Trend dots move below, above here, pushing down, but then we're back underneath. Now we're starting to see a reversal in trend dots again. They've rolled, they're very close to the price action, they've moved above, they've changed to red, but the trend monitor is still holding good. If I just check what the setting is for this one, this is on 30 seconds, so I'm just matching time with time. There we go. Just let that settle. Okay, that's telling me that it's coming up with 2.5 pips. So we've now got 2.5 pips on that one. We've got 1.5 pips on the first one. Let's just do the last one, which is a minute. Just change that up to a minute. There we go. Let that settle. That's coming up at 37. So that's 3.7 pips. So we're now running with multiple Renkos, and we've got the equivalent time frames below. And what a Renko chart does, it delivers momentum, because what you see on a time chart, whether it's a 15 second, 30 second, or a 1 minute, it will close off at the prescribed time. So on the 1 minute, it'll close off after a minute. These bricks will build according to this setting, according to 3.7 pips. Once 3.7 pips have gone through, the brick will close. It's completely independent of time, but this is a great way to use a non-time-based chart like a Renko in combination with a time-based chart, because you've got all the advantages. You now see volume, you see price action, so you can apply VPA. You've got a volatility trigger here, so what are you expecting? You're expecting congestion, possible reversal, which is great to see. You're seeing some buying coming in here on 30 second with the width of this candle, and moving over to the minute, You know, not a great deal of information from the minute chart right now, other than that we're in a congestion phase. Starting to see it push higher again. And as I say, what you see on the renko, you can see it now in action. You know, you're seeing momentum. You see suddenly a spurt of 2, 3, 4 bricks build. Why are you seeing that? Because we've got a volatility trigger on 15 now. On the 15-second, we've got volatility. Expect to see possible congestion building. It may break free, it may not, but at the very least, you know, it's a reason to expect something to happen. It gives you the information, you know, what is going to happen next, possible volatility, possible congestion, possible even a reversal. It's not what the trend monitor is saying at the moment. Blue, blue, blue. Trend dots are pushing higher, still blue. Blue up here, blue up here. We had a little bit of a pause point here, moved into the brick, but come out the other side. Because what you want to see with the trend dot is you want to see it below in an uptrend and obviously above in a downtrend. And when you get to these transitional phases of congestion, you will see it move into the, obviously in the body of the candle. If it's going to reverse, then it'll move from bottom to top and vice versa. In addition to that, we've got the accumulation distribution on here. That's giving us further details of strength of these levels of price in terms of whether we're going to see support or resistance coming into play. It's just a terrific way to blend both time and non-time based charts, but used again in a multiple way, which is the key to all trading. It's using it in this multiple combination. The reason we're seeing this flatten a little bit, we've still got very strong buying in the pound, but the selling in the dollar is starting to flatten off a little bit here. So in terms of that particular move, it could be coming to an end, but that's part of the reason we're seeing this momentum, the trend in the momentum pause somewhat. You will see trends in single currency strength as we're seeing at the moment, but it will not be as strong as you would see, for example, if we'd gone and had a look at the pound CAD, because the CAD is selling off just as strongly as this pound is buying. So in terms of a pound CAD move, that will be terrific. This is the reason that this move is coming to a pause point, is because the dollar selling is starting to flatten off. And that's the sole reason that we're now starting to see this congestion phase build and potentially a reversal. If the dollar starts to climb and the pound gets up into overbought, then you know that's the end of that particular trend move higher.
David, before I put pass back to you, you back up, can I just say something about?
Yeah, I'll switch off. I've been rattling on for a long time.
And then, do you mind wrapping up and we'll finish?
No, not at all. I'll switch off.
I just wanted to just add a couple of things to what David was saying on the pound, and it's really just to, I know I've mentioned it before, but one of the ways you can approach your Forex trading is essentially to focus on a currency and then take that currency and take some pairs, if you like, with it. And you know, you've got to you can look at the spread, you can look at obviously that going back to time zones and sessions, and what I've done, so you can set this up in MT45, and I've just happened to set it up on NinjaTrader, and you basically set yourselves up with the CSI just for the pairs. This is my this is the one that I have for the pound pairs. So this is the 10-minute chart of the CSI. This is the move that we're seeing in the CSI. You can see here it's been going up. You know, it's not been an easy. There's not been strong divergence in the pair until we've had this cross that, as I said, we picked up at about 8:30, and we'll look at the charts to see what the chart pattern was at the time. But the CSI says, okay, you may have heard the noise that comes through sometimes on these sessions, and I've set up an alert on the Ninja, and there are alerts on the other platforms as well, which basically tells me that there is a cross. Now, when I get a cross, you may have, some of the move may have happened already, but it's telling you that, it could be coming out of congestion phase, or it's coming up to a reversal, but it's just useful to have. So this is what the price action looks on the CSI for cable. If you go over to the pound CAD, as David said, you've got a very much stronger move there. You can see that you've obviously had some congestion. Why? Because the lines are moving in the same direction. Then you have this really nice divergence. So, but you may think, well, the pound CAD is awfully interesting, but if I'm on a very fast time frame and the spread is going to be a bit wider, then it's probably easier to stick to cable. But to look at cable, which I've actually got on my little profile here, which I've got on the 3 minute, let's have it, I've actually got the 5 minute version, and I've got the tick speed indicator underneath here as well. That tells us whether, if activity is picking up. We've got all our indicators do, they give us different bits of information and, at different times of the move. But the interesting thing, if we go back to the 3 minute chart and we look at the timestamp, because what happens often especially with London, it's almost as if you've got to give it a bit of time to settle down. Sometimes it can be 10, 15 minutes, sometimes it can be an hour, and you have to get all the rubbish out of there, all this trickery and trapping traders and what have you. But essentially the move, you have this really, really nice, you have this bullish engulfing candle, you have it off this outer limit of the support region for the volume point of control. It takes it to the volume point. That is when you get the cross. So you may have missed, that bit may have gone fine, but if you're, obviously you'll be looking at charts as at the same time. You've got volume going in. You can always get a bit of a pause here at the volume point of control, and you've got this resistance level here, so you can see it. You're going to need some volume to go through. Now as it's going up, you can see it reaches one of these volume resistance, but it looks like it's punching through. And what you need to know now, and it's really good to see the volume rising as well. You look, I've only got one renko up at the moment. This stayed blue. These are the little sort of pushbacks that we had here. I've got my levels up here. Where is this aiming for? Well, I've got it on a very, very, I've got for the hard of hearing here, the R4, whereas 29.30. So, potentially it's got a little bit of, potential to run higher. I've got the CSI that I can always keep an eye on to see what is happening with the lines. Is it still, is it still pushing higher? It is at the R3. Can often have can hold it up, can even sort of have a little pullback on there, but the renko will help to keep you in this. This is the 5 minute chart. It's actually hit, as I said, one of these volume resistance here. David says you've got volatility coming in. You've got to be aware. It's like, it's like watching instruments, as it were, on your car or on a plane. Each instrument gives you a little bit of information, and you think, oh my goodness, how can I absorb it all? Well, you do, because you drive your car. You look at your speed, you look how fast you're going. Maybe there's a warning light comes on because the oil pressure comes up because there's a problem with air, or it's overheating, or as I said, don't be overwhelmed by what you have to consider when you set up multiple time frames. It's very I just want one time frame. I just want, where do I get in, where do I get out? Well, it doesn't work like that. It's all right for a bit, but honestly, it's a little bit more complex than that. It's not complicated, it's complex. And once you start to read it through the perspective of VPA, which is, volume, price action, support and resistance, candles, candle patterns, and time in multiple time frames, it really does all start to come together. Right, I'm going to pass back to David. I don't think we've got a question. Someone just mentioned the I've been told that most of the volume is traded in London. Yeah, you can't really say that. To be honest, you can't say that, because there is certainly a surge in activity. The retail market makes up a heck of a lot of percentage now. And you've got fundamental news releases coming. You've got geopolitical events. So that may be, 2 or 3 hours. And London certainly has over 40% of the global Forex market. So yes, you would expect to see a lot of activity. That doesn't mean that pairs don't move in New York. As I said, we had the pound Aussie last week moving to over 200 in the day as a roller coaster. That is not uncommon. That has happened on, it doesn't happen every day, but it does happen on, on more than one occasion. And finally, yes, on the New Zealand, I think you, Anand, you mentioned there is an election coming up in New Zealand. The actual election is a couple of weeks' time. It also is an example of, if you are going to focus on a pair, on a currency, you really need to get to know that currency in terms of obviously who the central bank, are elections coming up. You really kind of build a dossier up of you do your research on it the way you would do your research on a stock, so you know exactly who's who, what's likely to drive it, which items of fundamental news are more important to that currency in whatever, in the cycle that we are at the moment. So you talked about Forex futures, now the reverse of spot. Can you, yeah, Keith, I think what we'll do, we'll talk about that when we come back this afternoon. Essentially, it's the notation. So as David says, in the spot, what you find is if you want to trade, say, the Canadian future, you will find in the futures market, it is not shown as the dollar CAD, it is shown as the CAD dollar, because futures are all traded against the dollar. So sometimes the notation in the futures will be the reverse of what it is in the spot, and obviously the values will look different. Is that okay, David, what I said on that one? Right, I'm just going to pass back to David. We'll see. Oh, you mentioned that volatility. Finally, here we are. Well, we've got a volatility candle on the 30 on cable, so that little run up, is it any surprise to see it back into the spread of that candle? Answer no. And we're at this, as I said, at this level here. So thank you very much for coming along. Let me just pass back to David. Is that okay, darling? Yeah, absolutely. Thank you very much.
Hopefully you can see my screen very quickly, just to wrap up, because we're way over time. Apologies, everyone. Just switch that off there, just move that out of the way. Back on the Renkos, you can see here what's going on. We've got the pound up into overbought, is now starting to roll. The dollar is starting to buy, so we're seeing this really nice smooth move on the Renkos. We've got a move to the downside, trend dots have moved to the upside, changed to red, and you can also see what's happened here. The trend monitor is transitioned right through to bright red, so we're in a nice bullish move lower. Same on the 30-second equivalent on Renko, same on the equivalent on 1 minute Renko. The only difference is that the transition in trend monitor, it's going into, you can see it rippling through as I'm talking. We're waiting for it to come through onto the 1 minute, but perfectly enough for a nice scalping trade to the downside now taking shape. And there we go. Confirmed down on the trend line on the time frame charts at the bottom here, and obviously on the CSI. And a flick over onto the multiple CSIs just very quickly to wrap up. Where are we? There we go. There we go. There we go. Right, on 1 minute, that's what's happening. Selling of the pound, selling of the pound. Not into on the 10. This is 10 minute now. We're not up into overbought and oversold yet, but it's certainly starting to roll in terms of the faster time frames, and we may well see that continue through the other time frames. So that's it. There we go. Where do you find everything? Well, you'll find the education, the Forex trading. It is called the Complete Forex Trading Program because, put simply, that's what it is. It's a quantum trading education. It covers everything you need to know to trade this market with confidence. We start with the psychology module, which is where we always recommend our students start. There's a huge deep dive into fundamental analysis. Relational analysis is so important. Deep dive on technical analysis, all the aspects of VPA, but to a different level than explained in the VPA book. And the mechanics of trading, explain to you how to trade, tactics, timing, developing your trading, all those sorts of things. There's over 200 hours of video in here, topic webinars, pulling it all together, of course, how to use the indicators, masses of VPA chart examples, there's a webinar library and resources. It's all there. And this is the VPA room, which is over here. That's where we are at the moment there. So that's the program. In terms of the indicator, that's that's Anna's site, annacooling.com. You'll find her analysis there. You'll find all the books here in Kindle and in paperback, all up on Amazon in all the various countries around the globe. Very proud to say that the VPA book is now being translated into Vietnamese as we speak. So it'll be available in Vietnamese, Japanese. We've got 2 versions in Chinese, simple and complex, in Taiwan and mainland China. And we're talking to other publishers as well. So it's just been a hugely humbling experience in terms of that particular book. And indeed, also some of these books are also being translated into those languages too, alongside those. So you find all that there, all the analysis. In terms of the indicators, you'll find them all here at quantumtrading.com. MT45, NinjaTrader 7.8, TradingView, and yes, TradeStation. We will be launching TradeStation at some point in October. I can guarantee that for you now, because we've done all the development. We're pretty much through all the sort of support pages that we have to put together, the videos. There's something like 60, 70, 80 videos I've put together so far. So it's all coming together nicely. That's 2 versions. That's TradeStation Global, which is 9.5. If you have an Interactive Brokers account, you can hook it straight through to TradeStation. You can trade through that particular interface. It's very powerful. You're dealing with a deep discount brokerage and a hugely powerful platform. TradeStation 10, TradeStation Securities, that's got radar screen as well. It's got all the bells and whistles, and all the indicators will be available there, both in terms of the platform and also in terms of radar screen. We've developed them for radar screen as well. So you'll have a complete interface of being able to monitor all the indicators through the prism of radar screen, which is so powerful because it's almost like a mini chart for each individual cell. It's very exciting. We're very proud to have done it. It's taken us a long time, I can assure you, much longer than we anticipated, but there we go. Once we've launched that, we'll be dropping onto TradingView. If you have the full package of TradingView at the moment, the price is substantially less than the MT45 equivalent, partly because we couldn't port all the indicators across. We can now. We've got the development opportunity available. We've got it in PineScript. We didn't have object and line drawing. We've got that now. So we're going to port all the other indicators across to TradingView. So it's a great time to buy TradingView the full package, because if you, we will actually add all those other indicators free of charge. As soon as that's launched and they're available, then we will up the price and it will align with the MT45 version. So it's a good time to invest. And it's also a way of saying thank you to those of you who have invested in the full package on TradingView. You'll get those indicators free of charge. As the currency matrix, the array, the heat map, I think the VPOC and maybe one other, can't remember now, but there's pretty much that suite of tools we couldn't develop at the time. So that's it, we're done. Thank you so much for coming along today. Sorry we've gone way over time. I'm just looking at the VIX over on the right hand side. It's spiked up, it's now trading back at 27, and we've got volatility again. So, you know, it's risk off at the moment from an intraday perspective for the time being at any rate. If you have any questions, happy to answer them. Anna at annacooling.com, David at quantumtrading.com. We have to run. We've got to take Bertie out for a walk. So thank you so much for coming along today. Hope you've enjoyed it. Sorry we've run right over time. And we will be back this afternoon at 3 o'clock, or is it 3:15? I can never remember. I think it's 3 o'clock. Anyway, we're back this afternoon on the US session. So we will either see you there or we will see you this time next week. So enjoy the rest of the trading day and the rest of the trading week. Stay safe. See you again soon, and bye for now.